Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So it is Tuesday, another big day in the markets. Lots of people are scratching their heads. How could this happen? I thought everyone said we were in a bear market. I thought everyone said that the Fed was going to get rid of their POMO, their open market, whatever you want to call it. Anyway, the action is giving you lots of clues on why. Maybe you don't have to be all in long, but at least you shouldn't be fighting this thing short. So let's just get right to the charts. You go right to the SPX. Remember this pivot low? Doesn't this feel like this was, I don't know, a year ago? Well, anyway, this was your low at 1820. This was your higher low. Question was, what type of move would he have thereafter? You had a nice little gap and go above this pivot. I remember that Jobs Friday. That's when everyone was like, oh, let's just sell in front of the 200-day. Hey, look at the 200-day. Boom. That was reclaimed. Okay, so within 1, 2, 3, about 5 sessions it took to reclaim the SPX 200 days. So remember, 5 days for the S&P. So what you do is you try and look at other sectors that didn't take as long, that might have held above or taken 2 days to find your relative strength. And then I do remember, thinking, okay, maybe they take back the 200-day and they squeeze everybody and they want to, retest the 21-day, which usually will be good resistance if a market's not going to rally much further. That was the 150-day right there that we held a little bit before breaking below. And then, boom, you powered right through it. It was no match. So right there, that'll tell you, say, okay, maybe I shouldn't just have short on the brain. Maybe I shouldn't be following some guys that are claiming to just be short, the bull's over, low volume, don't trust, whatever it is these guys say out there. Anyway, you had a little red dog reversal. And I remember that day because this was the day I went out short. I was like, oh, you know what? Little red dog reversal. Let me go out short. We should be able to pull back, right? Why not pull back? We've just had a massive move, okay, all the way from the recent low. Red dog reversal. Made decent money that day. Took a third. Then the next day, boom, engulfed it. I remember getting out saying, you know what? This market's strong. And let me find quality longs versus just trying to find shorts. And then P.S., this I think was Friday when the Ebola news hit on New York City when we could have, came in and we did not. Every bear out there was cut and pasting every article possible about the different news links on who has Ebola and where there's quarantines and wishing and spreading fear. And then remember yesterday you had oil. Oil came below 80, held. We didn't even get to support 1. Everyone was claiming we're going to fall apart, retest the lows. I was on Fox Business at 355, and the guy was even saying that. And I'm like, well, we held above support 1. We didn't even get back to the moving averages here. Chances are, if we break above 1965, shorts are going to friggin' scramble, and longs or guys that have risk down are going to come in, and PS, boom. All right, so, V-bottoms are never easy. And right now, we've penetrated a lot further than, anyone would have liked. Or some or most wouldn't have liked. At this point, if you made money, be happy. If you looked for quality setups, that's what you have to do. If you've just shorted every single day with an opinion, then I hate to see people lose money, but you got to make some changes because this market gave really no clues besides low volume, which, we've had low volume rallies probably the last 3 years, but we did have volume at those capitulation lows. So anyway, this is where we are. If you came in long today and you still long, have a reason for being long, there are some things that probably could use a rest and some things that can continue. So let's just go through some of the charts. Apple, something that we've been talking about and riding, pretty much ever since this gap up after the stock split announcement, but then recently another swing trade happened on the earnings, tweeted out, I think at 5:15. I'm like, you know what, I'm getting long at 101 and change. I don't care if some people are saying, oh, it's rotten to the core or whatever people are saying out there. Looks good. As long as this gap holds, you could trade versus low here. I think you hold it for a swing, and then you had another entry when it cleared the 52-week high here, and now you had another move into the upper area. So with that being said, it still looks good. It's a little extended, but at this point, the chart is strong and it's giving you lots of pivots. As far as other names in high beta, what did Netflix do today? I don't think anyone even talked about Netflix. You know what? Put this on the radar for tomorrow. This gap down came off the lows on earnings, and if you didn't take it into earnings, that's fine. Okay, you had a nice day trade that day, and then it cleared this little pivot into the earnings gap and gave you a trade, and now it looks like tomorrow maybe it does it again. Not so bad. Google, a broken name. Some guys are playing it today for this mid-level bull flag continuation, and that's what you had. And at this point, maybe it takes the 200-day back, maybe it doesn't. Not that compelling. Where the action has been in a stock like Baba. Baba, gave you a really nice trade. We've been trying to focus on it, and yes, we were a little early. I remember on this day, I got a little hurt as it didn't close above the 90 and failed. Then you had your red drug reversal. This is when it got back on track. This is when it traded above this area here and then held above it for the first time, and then boom. So what happened today? You had a little bit of a doji close. First day, I'm not taking it home long. Doesn't mean it's going to fall apart. Doesn't mean you should be shorting it. It means that, right by the IPO high, with earnings coming out in a week, maybe it rests a little bit, which would be nice. A nice bull flag here would be awesome. Then perhaps we get another trade here. But this has been a really nice ride. Hopefully you've been in there with me, with Baba. It's been good. Another new issue, which I guess kind of shows you how fast these things trade. I was long this, and I posted the chart right here, and right from the stare machine, I had an offer out around 36, thinking maybe it trades through, and that's what I wanted from Friday being long, adding. I sold some. I had no idea this was going to happen, but you never know. And if you were in it and saw it trade above the prior high, come back below, it's your sell signal, and now it just needs time. That happens. RWLK, another new issue. This too gave you, a quick move yesterday, another trade today, and then didn't close great. Sometimes these things take a long time to work out. At this point, was an active trade, not necessarily ready for prime time yet, but you could, keep watching that. Another new issue, which I'm still long this one, is Loco. This has had a lot of start stops, and we'll see what happens here. This gave you one trade above this 35.50. Next real, I guess, trigger would be if it trades above this, or today's high tomorrow, and then 38. But it's been under accumulation for multiple months. Not sure exactly when it would like to go, if it needs earnings, but at this point, still looks good. Next buy price would be if it gets above 38 and stays above it, doesn't push through and fail, etc. One of the problems today for some people was Tesla. Tesla, I did not go home with any position, but in the morning call, I said, what, it's going to be a fight. The stock closed very weak yesterday on the 200-day, so the good book would say to short that, right? Closed weak, dead lows below the 200-day. You know what? If you made money short and you stayed with a third, you did the right thing somewhat. But then you had to give yourself an out today. Elon Musk came out and, I guess whatever he said to the whole leasing program, and he defended his stock. For the first time, he defended it versus saying he thinks it's overvalued. So really, the only thing you could have known is right here. Okay, this is where it went out. It went out right out the 200-day. It triggered below this bear flag. Looked like absolute, what. Okay, and then today it opened up, and the only thing you knew was what are you going to do if it trades above yesterday's high, or if it trades above this small little pivot. So that was your plan, because you didn't know. So maybe you added a little bit short, to say maybe people aren't going to take his word for it or whatever. But 234, one spot, this spot was 237. So when it cleared this spot and you were short from here, you had to salvage a trade. You had to get out here or you had to get out there. And I know Mark, who had nothing on, said, I am a buyer here because shorts are trapped, and I'm a Tesla fan, and I'm a buyer of here. And P.S., it closed very strong, and now we'll see, what happens coming up. You have the gap right in front of you right here, from when it had its product announcement, and we'll see what's next. You have a downtrend that it's still not even poking its head against, and if you're rolling up shorts, good luck. I don't know what to tell you. I have no position here. All I know is that the dynamics were real tough. Stock's been weak ever since breaking, just say this trend line right there and this flag here. And today it showed you something different. If you go to the volume, go to basic studies, go volume, see the type of volume was in here today. Some big volume. Some big volume yesterday, big volume today. And, it's unfortunate. Guys, listen. Sometimes you have broken patterns. Sometimes the rules that you follow change. Like if you're playing blackjack, right? You're playing blackjack and you get 2 5s versus 6. What does a good book tell you? Actually, that's not a good example because some people would just hit or some people would split them. That's not, so obviously I don't go to casinos that often. Okay, so just say you have two, whatever it is, or okay, an 11 versus 6. I know you're supposed to double down there. So 11 versus 6, you double down and you pull a 5. Okay, and then the dealer has a 6, turns over a 4, gets a friggin' face card, beats you, you'll lose. That's a broken hand. Broken hands happen in the market. You just can't let it get out of hand. You have to do what's in your control. And if you go back to Tesla here, all you knew is this pivot and that pivot. And above this, shorts would scramble. Above that, shorts would scramble even more. And you close pretty strong into what could be a gap. So we'll see what happens. And then for it to begin a new trend, it would probably have to break above this. And there's still some time to that. So anyway, hopefully you weren't caught in this. And if you were on the virtual trade floor, no one really went home short. And you probably made a lot of money long because that was Sperling's focus of the day. So go to some solar names because that's another sector that kind of woke up, not leading whatsoever, below the 200-day. But here you go, cleared this. FSLR has some room. Solar City also not quite cleared that, but bounced off the lows, going sideways, has some room if these things want to bounce. But we shall see. Let's take the volume back off of here because it'll make the charts a little cleaner. So this morning I talked about the backdrop overseas because Europe has been a headwind, okay, and so has Asia lately. And then finally, this morning, I think Europe is going to be a little bit of a tailwind because it can continue the bounce. Let's look at the EWG. EWG, you look now, okay, here was your low, okay, here was your gap up, commitment to it, and now it just cleared and went above the 21-day. So there's actually some room right now to get back just to here. Okay, not saying it's going to go back to the highs, not saying it's going to take back all the levels it broke because, this did break some serious trends, this being one of them, this being another. Remember when it went below the 200-day and then had a small bounce back to the 21-day and failed? Okay, stayed below the 200-day. Well, now, it seems as if this can continue a little bit higher, so that could be a little bit of, a decent backdrop for us besides a headwind. And then you look at the FXI, it also, we looked at this in the morning call and said that it looks like it's at a crossroads. Will it be a headwind or a tailwind? And then all of a sudden the Shanghai had its first day up, and now you have a gap to trade against to see if it wants to stay above that. If the FXI stays above this gap, moving forward, it could be something to stay with for a swing trade also. So we'll see. Remember this island top that led to a big decline? Well, now you have a gap up, and we'll see what that leads to. Some of the banks were strong today. Goldman Sachs, we talked about the leadership in this. I think yesterday went over it in the morning in the recap actually, and here was the first move above a pivot. Now it's on its way back to highs. Citigroup also broke a small little downtrend. Unfortunately, I didn't go with Citigroup or Goldman, but I went with Bank of America, which is trying to wake up a little bit. Still not so fast and furious, but I've been trading such high beta names that I needed a bank that I didn't really need to worry about so much, but it did clear this pivot. It has some room. Maybe it hits 17 by Friday. We'll see what happens. And then what else was going on? I think yesterday we talked about cores. Just as a trade, just as a laggard, it's something in retail. Wound up trading above this level and has room to the 200-day. And then we talked about the XLE, which yesterday held where it had to somewhat. Oil broke down and then it came off the lows. That was your point of reference. And now today had a decent, strong day, and you have a mid-level flag. Not an upper flag for, a huge move into new highs, but if you sold, okay, when these trends broke, and these trends broke hard, right? This one broke here, then it broke another level here, then it got below the 200-day right there, stayed below and accelerated lower. And now, if you're trading it fresh from, remember that day that it showed relative strength while the indices didn't even go positive, and then you had a higher low. Here is the low. Here was your higher low. Here's when it triggered above that high. Gave you a quick move to the 21-day, came in, still made a higher low, and now looks like it could continue. So if all of a sudden the oil names continue, and this gets back to just say like 89-ish, it's going to be hard for these markets to go lower. OHs looks just the same, where not as strong, but remember that red dog reversal right there, and then it gave you a higher low by a little bit, by a smidge, and then came to the 21-day, failed, and then gave you a support right there, and now it looks as if it's trying again. So if this were to push up, maybe there's a laggard trade there. The Russell, also off the lows. Wow, look at today's power in the Russell. This actually took back the 200-day with authority. I know everyone's been bashing the Russell and the IWM, but ever since, remember we talked about the ascending channel when it broke below this wide range bar below the 200-day. Well, here's what you call a red dog reversal. If you ever heard the term, something that's pretty near and dear, where it breaks below a level, comes back above, gives you some authority. Next day held even better than the oil names, gave you a quick move up, again held higher, broke this little descending channel here, so to speak. Then we talked about, remember we talked about this inverted head and shoulders pattern, left shoulder, head, right shoulder, and look at the power there. Everyone's bashing and bashing and bashing. But anyway, now I'm not saying it's going to be clear sailing for the Russell, but and I know it's down for the year and it's not the same percentage returns as the TLTs, but entries and exits matter. So if you got out right here and got in at the red dog reversal or got in the higher low, doesn't matter where it is for the year, you're making money. Same way I said with the TLTs, if you were trading the TLTs for a new trend here, and there was a new trend, okay, there was a new trend for guys that trade active trends right here when it went above 114. It was holding the 8-day all the way up. Then you had this wide range bar capitulation type move. Said once it gets below the 8-day, if you're trading it for it to be holding the 8-day, that's your out. So a nice little move from here. Hopefully you sold some into that craziness, and then maybe you had your out right here below 120.48, and now you don't really care. And now it's struggling to hold the 21-day. Might even get down to here. Depends what the Fed does tomorrow. But meanwhile, it's better to be out of the way than caught. What did gold do today? Gold also, gave you a nice little counter trend trade. Not even a big one or a compelling one when it closed above this 117. Came back, retested that 120 pivot. Remember, it actually pushed through a little bit because that's what the algos, I guess, like to do. Remember, it pushed through right here. And this too was following the 8-day, and then once it broke below the 8-day, that quick little trend was over. Still below the 200-day, still weak, still non-compelling, and I still think it's an avoid. But there was something to do here if you had to do something in gold. So to make a long story short, tape has not been easy, but it's been a lot easier if you follow patterns, if you measure commitment, if you have some quick feet, if you don't have opinions, and you don't listen to those that rant out there about whatever they rant about. Drown out the noise. The noise is tough, even the TV set. I remember that Wednesday, everyone went to cash. Thursday, everyone declared a bear market, and then all of a sudden yesterday, oh, now you can put your big foot back in the water, about 7-8% higher. So we try and time things a little bit better, and granted, no one's perfect. I'm far from it. I tried and, work on my process every day. We all know it in the VTF. We all have our problems and trials and tribulations, but at least we try and be consistent. We try and have a strategy, a plan, an out, and we try and just stick with the charts and our strengths and work on our weaknesses and make progress. And that's all you could do as someone that tries to be involved in the markets. If you try and stay with a thesis, with opinions, you could blow yourself up. If you started shorting the spiders or the SPX at 1890 and you're still shorting based on the low volume and that you think it's a bubble, chances are you're not going to be solvent. You've probably been blown out of the water. Even if we wind up pulling in, you're never going to stay the course. And I'm just not getting into it anymore. With that said, I hope you have had a few good days because there's been a lot of active setups that have worked well. There have been swing trades that you could have trailed that also could have helped you perform. And at this particular point, we'll see what happens in the Fed tomorrow. Fed's tomorrow, maybe it'll be a short-term peak. We'll see what they do. We'll see if they just reduce the pace of purchase, and why wouldn't they, considering we're back near highs. And who knows, maybe they drop considerable time because of the market strength, and then that will create some volatility. But if they keep considerable time, chances are we're going to be in the same market we've been in, which has been a little bit of a pain trade if you have been flat-footed and with risk down and just trying to be short because that's what the cool people out there are doing. Not that cool. Trade the price action. Have a good night.